All righty. So, like I said, we're going to do a trade recap from today. This was a losing trade on SPY. I like doing these trade recaps with you guys. It lets you guys know the process or what I'm seeing in the overall market, why I'm taking the trade, why I think it turned out being a loser, why I was a winner, etc. You know, all that good stuff. So we're going to continue to do these every single day. But the losing trade today was on SPY. Now, we took a beautiful short yesterday on SPY. We did that trade recap right up here at this 61.8. Caught it back down into the low of the day. That was absolutely beautiful. Now for today, what I was looking to happen was we rejected off of this really strong weekly fib, right? Let me just go ahead and delete this, delete this. So we rejected off of this weekly fib up here, 429.61. We rejected it Monday, rejected it again yesterday. Since this was such a strong fib level, ideally what I was looking for, and because we sold off significantly, what I was looking for was for price to come up, set a lower high, and then roll over and come back down and set a lower low. That was ideally what I was looking for today. Now, as we see clearly, that did not happen. We might actually test 429.61 again, maybe even today. But if it happens tomorrow, I'd definitely be interested in trying to take it. Unless we break above it, then there's a lot more upside. But again, what I was looking for was for price to come up, set a lower high, again, 61.8, ideally is what I was watching for rejections to then take it short and potentially take it back all the way down here. Now, actually going into the trade, we got a slightly early entry near the 61.8. I wanted to start an early entry just in case it did not actually hit it. So if we break it down to a 1 minute time frame, we had this nice little uptrend today. And again, going forward, what we're going to do is when price is just slowly uptrending, hold on. Boom. Slowly uptrending or downtrending, we are going to take rejection points and bounces off the table. Because as you see, we were just climbing to the upside. I believe we were just following the 8 EMA to the upside. So let me put the 8 EMA on real quick, or we'll just rock with the 9 either way. Slowly just uptrending to the upside. So ideally, what I would like to see is a larger move going into the reject. As you can see, this was a larger move going into the reject before it came down. This was kind of just like a slow grind up, but it still confirmed the entry, right? So that's what we're going to be doing differently going forward. Ideally look for the large move. So as price is coming up towards the 61.8, we got the starter, right? So typically with a starter, what I'm looking for is around like 25% of my full position. So we got the starter, it pulled back, right? And price was holding this, it was like 427.8 was where we were having those big buyers come in. So price pushes up and then it comes in and actually gives the real entry. This is ideally what I like to look for when we come to our fibs. This right here. You guys heard me in voice say, this is the entry candle. This is where I'm adding my full position, right? So 25% as the starter, the rest of the 75% as we get the actual entry. That way, you know, if you're only 25% in the position and it just blew through what you were watching, your loss is very small. So as it gave the entry candle on this one right here, we added to the rest of the position. And my first price target was where those buyers were at 427.80. And as you see, as we started to come down towards the area, we literally bounced right off of it. We took a trim down there because that was the first price target. But as it continued to sit here, I kept seeing buyers come up on the level 2, on the bid, large buyers. So as it continued to bounce off that 427.8, that is actually where I lowered the position even more, just in case they decided to pump this thing and continue to push it, while still leaving a little bit there just in case it continued to drop. Does that make sense to everybody? Or as soon as I don't feel comfortable in a trade, I'm going to lower my position, right? Everything looked good about this. Again, it did the same exact thing that it did over here, right? So the risk to reward was there, but as soon as I start feeling uncomfortable, I'm going to lower the position. Yes, it still could have rolled over and died. That's why we had a little bit left on the table, but just in case it didn't work out, that's why I wanted to lower my position. And I constantly was saying, okay, we can lower the position even more. If you guys aren't feeling comfortable, you can get out for a little loss, maybe even towards break even. And those buyers would not let it go off of that 427.8. And the stop loss was right above these highs up here, right? So entry candle, as it broke through, reclaim the opposite side. Here's our stop loss right up here. Again, I will take that risk any day of the week. Very small loss if it's hit. So eventually, as we see, after being in this trade for literally like what, 30 something minutes, it finally came up and it hit our stop loss right here. Again, small losses. I will take this risk any day of the week, because had we been those people that are like, no, we're right. You know, this thing just continued to climb to the upside. And you don't know, like at this point, right? It hits your stop loss right here, hits your stop loss. You have no idea what's going to happen on the next candle. It could continue to pump. But that's how I always keep my losses so small, is because I've mastered sniper entries to the point I can take 3, 4, 5, 6 losing trades in a row, but the next 1 to 2 trades that I can milk out those profits, I'm going to make those losses back plus more. Does that make sense to everybody? So unfortunately, the trade did not work out. It happens. That's why we use risk management, sniper entries, keep the losses small. Now, if you over position yourself, oversize, that's where the losses are really going to draw down your account. And there's somebody who I always talk to, right? I always talk to him about my trading. He does jujitsu with me. He asks how's trading, right? I'll tell him when I lose. I'll tell him when I win. And he always asks the same thing. Do you have more money than you had last week? Right? If your answer is yes, you're still on track. Do you have more money than you had last week? Yes. Good. You're doing good. You can take losing trades. It happens. But remember, your account and overall progress in trading, you just go ahead and delete all this. It's never going to be this, right? Your account, your P&L curve, whatever, it's never just going to be this. More so, it's going to be like an uptrend, right? You're going to have your drawdowns. You're going to have your big days and then drawdowns. That's part of trading. As long as you master risk management, this is how your account should look. Yours is sideways, that's okay. At least yours isn't like this, right? If your account looks like this, then we need to have a conversation. But I'm telling you guys, if you can master sniper entries, keep your losses small. If it hits your stop, accept it, get out, move on to the next trade. That's how you're going to stay profitable in the market. And just because the trade doesn't work out 1 or 2 times, it doesn't mean the strategy isn't good anymore, right? We take so many Fibonacci trades, so many. Almost all my trades are Fibonacci. All you have to do is find your entries and then stick to your risk. That's what trading comes down to. But I mean, yeah, that was pretty much the whole rationale behind today. I was just looking for that lower high. Unfortunately, we didn't get it, and that's why we use risk management.